Right, so you should all be able to see me now. Hopefully, we've got the PowerPoint coming up. Let's just see. Yep, we got you clearly now. So, welcome to everyone. Wow, we certainly have something of a lot of interest tonight. We've literally got a full house with the amount of people, hundreds and hundreds and hundreds of people that have signed up and are joining us this evening. So, really, James, you've obviously got something that a lot of people want in terms of understanding where the markets are going, what's happening with the rand. I know it's been a tumultuous 2 weeks, and I think a lot of people are wanting to, understand. And equally, I just want to say thank you very much for your time coming online tonight. I have been doing some surveys and trying to get some feedback from people as to who they wanted to see. And the two people they wanted to see most was you and Clem Santos. So you guys have clearly added the most value to them over all the years in terms of what you've been speaking about. So welcome, James. It's awesome to have you online tonight.
Thank you, Scott, and I'm excited to be here tonight, and I'm hoping to give all your listeners, a lot of value. Thanks for making the time.
Oh, fantastic! Well, it's great to have so many people online tonight, and as always, I love sharing. What a lot of people don't know is that tonight I'm actually supposed to be on leave, so this is how I spend my leave. But I think it was really pertinent, and you were available tonight, and we really wanted to share with everyone. So thanks very much. Just before we get started, I think something that's really important is that we are becoming in terms of where the market's going, and equally in terms of what we're offering. I think it's very important that people understand. We're not offering advice. I and Migrate are not registered or able to offer advice. What I am allowed to do is talk about my own experiences and the type of techniques that I've used literally since the age of 22. I've been investing both locally and internationally, and there's various tools and techniques which I use all the way through the process to make sure that I can make the right decisions. And I think really from tonight's perspective is that when it comes to James, I'm not necessarily saying to everyone that you must take his advice, but I have learned one thing in my life. I like to work with people who have systems, and then what that allows each and every one of you to do is to ultimately make your own choices for your own life. So I want to be very clear here that even James is giving a perspective on the future. He's got a system which is very, very valuable, and he's going to share it tonight. But I think what's most important is that each and every person that's on this webinar still takes personal responsibility for their own lives and the decisions that they make. And really from our perspective tonight, James and I are going to share with you our own personal experiences, how we've done it in the past, and the type of track records we've done, but most importantly the systems in terms of where we are and what we're doing. Now, I think just something that's pretty important for you is that last week I actually did a webinar on the 5 most dangerous trends affecting South African citizens today, and how with an uncertain future you can get to have wealth preservation, a plan B, peace of mind with regards to you and your family's future. And I think that's really, really important. If you are interested in the recording, you can just type in there, webinar last week or recording. I don't really know what you want to type, just to make sure that that you can get it, or even easier, you can go on YouTube and watch it. I think what's also quite important is that later this evening I'm going to share with you how you can actually get a report on the 5 things you need to know before you invest offshore. How you can, if you're a beginner, how you can actually get started in real estate. If you're intermediate, how the 5 things you need to know before you invest offshore. And if you're very sophisticated, there's also a report on how to become a global citizen. At the end of the evening, I'm going to share with you how you can actually get access to that. But before we get started, what's always fascinating for me, James, is to try and see why people are here. And so you can see there's a bunch of different reasons why people turn up looking for investments, rand hedge, asset and wealth preservation, risk diversification, insurance policy, immigration, long-term investments, peace of mind, global citizenship, a bit of Zoomer proofing. But I just want to get people engaged before we get started. And I just want to tell a story while I do this. But you'll actually see here that there's a little poll which will be popping up for all of you. So for those of you who thought you were going to just turn up tonight and let James and I do all the talking, hopefully you're going to realize that tonight we want to really kind of get you engaged, get your brains working. What is it that you're looking to achieve? What is it that you're looking to learn? At the end of the day, it's your responsibility to really kind of get involved, get engaged. And I would ask you very frankly to ask any questions that you want. The whole night we're going to be presenting, we're going to be sharing what's happening. But I would ask you to really engage. There's a little chat box up in the top right corner for you. Write what it is you're looking to do. Engage in the polls. the more that you get clear on what you want to achieve, the more we can actually add value to you and help, empower you so that you can go out there and make those right decisions for you and your family. So I can see that 43% of people have voted. So, I would suggest that you really make some effort to engage in terms of where you're at. The other thing that's important tonight, while we're just finishing off on that poll, is that towards the end of the session, I'm going to share with you how we are going to give everyone the opportunity to have $100 so that you can actually invest and participate and become a global citizen and a global investor. I'm also going to share with you how you can get in an opportunity to win an apartment in the tallest building in Cape Town and one of the most iconic buildings in Africa. So it's certainly going to be worth kind of staying and being part of this whole experience and asking as many questions as you can in terms of the process and where you're actually at. I think really just to summarize, from last week's webinar, the 5 dangerous trends facing us today. The first one is extremely high stress. The second one is political and economic instability. The third one is currency devaluation. The fourth one is wealth preservation, which I'll talk about more towards the end. And the fifth one is when South Africans actually invest overseas. According to research done in 2010, more than 80% of them lose money. And it's why we are so passionate about empowering people to have the right information in terms of what it is they're doing. Now, just before I kind of hand over to James, I want people to really engage their brain. And I want to ask you, what does a global citizen mean to you? So just type it in the chat box. What does a global citizen mean to you? What does it mean to you? Why do you want to be a global citizen? Why should anyone want to be a global citizen? What does it mean to you? So let's see what comes through here. As you can see, James, I'm going to spend a bit of time this evening making sure people engage and that they don't spend time on Facebook and Twitter and email and Pinterest and all these other social media, so that they can really focus on what you're teaching. Because I think there's so much value that people can learn from what from your experience. So we've got people who have financial freedom, able to live anywhere, to be able to live anywhere in the world, no tax residency, choices, financial freedom, earning dollars, able to live and earn in any country, live in any place you want, travel and stay without a visa, foreign citizenship, to be able to go anywhere in the world, have your open mind and opportunities all over the world, diversification. Sure, there's lots coming through. So awesome. Thank you very much for engaging. If I haven't, I probably should have said who I actually am, because there's a number of people that are on tonight that haven't heard from us before. My name is Scott Picken. I'm the CEO and founder of Migrate. And I will go into a little bit of detail later as to who we are and what we're doing. We do these webinars on a regular basis. We've got some amazing webinars coming up over the next couple of weeks. We're really starting off with James, which, as I said to you, was one of the 2 most requested webinars. And then, believe it or not, I got it confirmed today, Clem Santa has agreed to do a webinar with us. So if you stay online tonight, you're going to find out when that webinar is. And if you want to learn from him in terms of scenario planning. So for me, when I look at a global citizenship, my background is that I'm half Zimbabwean, half South African, and really I've got a personal story which I share in my book, Property Going Global, which is really the book we wrote to help people figure out how to invest offshore and to learn a lot of the lessons that we've learned and not make a lot of the mistakes that we've made. But for me, the most important thing about being a global citizen is having freedom. It's the freedom to choose where you want to live, the freedom to choose where you want to work, the freedom that your children get to choose what school they want to go to, what university they want to go to, the freedom to choose which charities you want to be able to provide your money to or go on holiday, etc. The bottom line is you get to have the freedom of choice. The other 3 things which I found from helping over 2,500 South Africans invest overseas is that a lot of people want peace of mind. When Zuma comes out and we all wake up on a Friday morning and Zuma's fired, the finance minister, it really causes a lot of concern for all of us, a lot of anxiety. And you want to have the peace of mind to know that you've got a balanced portfolio. I was listening to an incredible book this morning, which I highly, highly recommend. I'm not sure if I've actually got it yet. If I don't, I'll get it just now. And really, it's from Tony Robbins. It's called Unshakable. And it's got the 4 pillars to wealth. And one of the most important pillars is diversification and being able to, and I think if people are interested, maybe just type in there the 4 pillars. Maybe I should do an entire webinar on that. in terms of how that actually works. But ultimately, if you've got first world assets and you've got a diversification across residential and commercial, across multiple countries, multiple asset classes, and multiple currencies, you're going to have a lot more peace of mind. You're also going to have wealth preservation. A lot about what we're talking about tonight is wealth preservation. James is going to share with you not just the sentiment, not just the highs and lows of what's happening in the market, but more importantly, the fundamentals that are taking place behind the scenes that people need to understand. Because what people don't understand is that a lot of people get caught up in sentiment. They get caught up on what their friends and family are telling them to do, or their bankers, but they don't understand the economic fundamentals that are taking place. And then finally, for me, it's about a plan B. Anyone that's been a good entrepreneur will know that, most good entrepreneurs not only have a plan A, they've got a plan B, C, D, and E. I'm sitting here with 2 computers, by the way, just in case it goes, one of them switches off. And I think what's quite important is that, when one's looking at currency and everything that's going on, it's equally as important, with regards to your investment strategy to have, plan B, C, and D. I think what's also really important is that when you look at it and how you create and protect your wealth, to have, we always say that there's only 2 things that you need to do to be successful. Now, I've learned one thing in life. Anyone that is trying to confuse you or overcomplicate things either is trying to charge you a huge amount of fees so that you feel stupid and you don't really understand it, so you don't go and look at it, or they don't understand what they're doing, because the ultimate sophistication is where you can simplify something. And so I believe that to be successful in investing both locally and offshore, you only need 2 things, and that is the right information and the right partners. And so tonight I'm going to share with you, one of my trusted partners, and someone who I've worked with now for over 10 years. This is not the first time James and I have done this webinar, and if anyone wants to go and look at some of his predictions in the past and to verify, I highly recommend that you go online and look at the YouTube videos many years back on what he said would happen and when he said it would happen. Because this is James Paynter. His website is Dynamic Outcomes. I have no idea how I found James originally, but over 10 years ago, plus minus, James and I started coordinating, and I started really understanding what he's doing. I will be honest with you, it's like rocket science to me. When I get in a car, I never have an idea, how the engine works. Quite frankly, I just want to go from A to B. And I think for me, from James's perspective, he gets very, very detailed in terms of the systems that he works with. I suppose, James, I'm sorry, I'm going to paraphrase it up front, but the way that I understand it, and I know you're going to go into this a little bit more detail, but it's like the weatherman. And, the weatherman is never perfect, but they've got great systems. And with great systems, when I look at my app, tomorrow, whether it's one of these AccuWeathers or whatever, it's got a far greater chance of telling me whether it's going to rain or be sunny than if it's just my gut feel. And so without further ado, I wanted to hand over to James. I really wanted to allow him tonight to share with you what is happening. But before I do, I want to share with you one story, because we're not allowed to give you advice, but we are allowed to share the systems that we use to make our own personal decisions. And I'll never forget, it was March 2010, and 2013. You can see actually March 2013. And James and I were doing a roadshow around the country. We got in front of a couple of hundred South Africans. We had a number of different partners, and James was our partner in terms of understanding from a currency perspective what was happening. And I'll never forget, in March we were sitting at about 8.80 to the dollar, and we had 4 functions around the country: Johannesburg, Pretoria, Cape Town, and Durban. And like I said to you, at least 220 people were present in the venue. And I remember when James put up this graph, and he said that there's a good chance that the rand would go over 10 rand to the dollar in the next 3 months. And I remember asking him, because in those days he didn't have probabilities. And I said, James, please tell me, what sort of probability do you give this? And he said, I believe that with the research I've got, and you're going to understand this better tonight, but with more than a 90% probability, it'll go over 10 rand to the dollar in the next 3 months. What really fascinated me is that people had their own information. They got their own choices to make their own decisions. And less than 20 people actually took action that day. And within literally less than 6 weeks, the rand went over 10 rand to the dollar and has never, ever gone back in the opposite direction. I'll never forget, there was one client in Durban. He had already bought a house. Rand was at 888 to the dollar. He's one of the most respected people in Durban in the property space. And he phoned his banker, and his banker said, no ways, it'll be 8 Rand by Christmas. And, you know, I still joke with him on a regular basis as to how that banker information works. And so, you know, it's without further ado that I really wanted to welcome James. I'm going to swap the presentation page over to you, James, so that you can take us through, you know, as to use my metaphor, we can lift the engine and you can kind of share with people some of the systems that are working below there to help us, you know, to be able to understand. But I want to leave and make sure that I emphasize one thing. These are James's systems. I've personally used these systems, and I'm quite happy to share this information with our clients so that they too have access to the right information and the right partners. But they get to choose whether they listen to it, and they get to choose the decisions they make when it comes to their investments. We're certainly not giving people advice. So I think from that perspective, James, let me just swap over the screens here and make you the presenter.
Thank you, Scott.
So just give me 2 seconds. I'm just looking for you. There you are. So I'm going to swap you over.
Okay.
You should just be able to share your screen, and then just go share screen. Someone's asking, how do I use the chat box? There's a little question and answer box up in the top right corner. Pete, if you just want to click on it, I see someone's answered you already. I think for the 4 pillars, people, I'm going to share later. We've got some live workshops in May, and I will go through the 4 pillars from Tony Robbins in May at the live workshops. James, I'm not seeing your screen yet. If you just go share screen on your side, I've given it to you. You should just be able to click on it and go share screen.
Okay, and now?
Got it. Perfect.
Got it. Okay, excellent. Okay, as I was saying to you, well, thanks very much for that intro, Scott. I was saying to you just before that, I don't want to just give persons a view on where I see the future of the Rand, but I want to give you more than that. And this is my promise to you, that after the next hour or so, I promise you will never see the market in the same way again. And that's what I want to leave with you, is to actually educate you about, you know, what actually moves the market, why, the how, and then the where. So you started off with a question, Scott. I think perhaps we can do the same. But before that, there's just say a disclaimer that, as you were saying, I don't provide advice. We provide information. And you know, any past performances aren't a guarantee of future performance. Trading in financial markets does involve risk. But let's start with the question. Let's go to financial markets and the enemy. Who do you feel that the market is always against you?
It's definitely against me whenever I was buying or selling. When it came to the currency, I realized a long time ago I'm no currency specialist, and if I'm buying, everyone else should be selling, and vice versa.
Yeah, well, and then who do you feel that it's almost like someone's looking over your shoulder, waiting for you to exchange just at the wrong time so they can move it the other way and profit? Well, what I want to share with you is that there's a reason why you feel like this, and there is an enemy, but it's not the one you think. And I'm going to reveal who that enemy is tonight, and to show you that the weapons he uses to make you make that wrong decision. So, if you stay to the end, we've got a special offer too. So please just hang around. I promise you, you'll get value throughout this this next hour or so. So let's just go ahead and give you a bit of an intro. What we do is we educate clients about the market, and we empower you to optimize your exchange transactions through providing forecasts on the dollar, euro, and pound versus the Rand, providing exchange timing tools, pricing and forex facility improvements, and ad hoc forecasts on other markets. Short intro on me myself. I'm not an economist, never want to be. I've got a mechanical engineering background and been in business in investment management, offshore investment management since 1993. Been involved in foreign exchange and technical analysis since 1994 and handled tens of millions of dollars in Forex for clients. We forecasted financial markets since 2005 for hundreds of clients in countries all over the world, and that's from leading industrialists and corporates, automotive and aviation companies. And apart from the rand, we've called some major market turns as well, like US house prices, oil, euro, gold, etc. I think perhaps it's a good thing to start with my story, because this is what led to my own journey, which I want to share with you tonight. Here, if you look back here, 1993-94 is when we started our tank container investment management business. And one of the pillars of that business was a depreciating rand. And as you can see here, from 1993-94, the rand depreciated gradually, and then from about 2000 or so, it started to depreciate more rapidly until the end of 2001, or in 2001 itself, it went from 8 to 1385. I don't know how many of you remember that year, but we haven't only had a year like the past year. 2001 was horrifying, but from offshore investors' perspective, it was a investor's dream. Gradually depreciating rand, and then we had this huge spark up here, and I remember sitting down on the 21st of December 2001, and we sat around the boardroom table and we said, what we're going to do here, we've got investor income a dollar income, should we cover this or should we leave it open? And he said, well, everyone's talking the rand is going to 20. We'd look like absolute fools if we took cover at these levels. So no, we're not going to cover, but we had shipping costs. And we said, well, we've quoted persons at around 12 and sitting over 13. We better cover this before the rand goes to 20. And so we took import cover at about 13.50 on that day, and a bit more in the days following, and we effectively left our export positions open. And as you can see, that was exactly the worst decision we could ever have made, as the rand turned around over the next few days and months and years. And it was a nightmare, because investors started, at this point in time, they said, we're no longer in a depreciating currency. We want to cancel our orders. And we had to cancel orders with manufacturers, and we didn't have the shipping costs, and eventually we had to cancel some of the shipping costs right down here. A few $100,000 rands loss. So that's, I don't know if any of you out there can have had this sort of experience, but this tell you I've been there, and it was terrible. But in one way, there was a silver lining to the cloud, because it led me on a journey of discovery, which effectively was 3 questions. I was left with 3 questions. What actually drives the rand? And why do we tend to buy when we should be selling, and vice versa? Because what we found at that point, Scott, is that investors they did the same thing. Everyone was rushing for the door when the rand was when it was weak. And it wasn't just ourselves. So I wanted to ask the question, why do we tend to do that? And then how can we prevent this from happening in future? Is there some way of preventing this from happening in future? And then, of course, where to from here? And that was the journey of discovery that we started back in 2004. And what I want to do tonight is actually answer those three questions, well, three questions plus a fourth. And so to start off there, you know, if we look at the Rand over this period, over history since 1990, we can see there's a long-term trend. This is a linear trend line. But then there are these big swings either side of the trend line. So what determines this long-term trend? But why these huge swings here? And what we did back then is to, well, let's look at the base fundamentals. Now, what is an exchange rate there for? An exchange rate is there to compensate for changes in the cost of goods or services between trading partners over time. And there are two core factors, and that is change in productivity and change in labor cost. So if you look at how South Africa has performed historically, we can see back here in 1980, around here, we were sitting at 31% of our trading partners' productivity. So here is South Africa, is the light purple, and the dark is our trading partners. So that's our productivity, this is theirs. And as you can see, from the 1980, we've actually halved our productivity compared with our trading partners. And then if you look at labor costs, back in 1980, we were 34% of our trading partners. Here up at 2014, which we still need to update the last couple of years, we're sitting at 130% of our trading partners. So you can see productivity has gone down and labor cost has gone up. And what that does is feed into inflation. So if we look at it, fundamentals, and we adjust the value of the Rand based on the producer price index. From 1970, we got data from 1970, which is when the Rand stopped being pegged against the dollar. And then we've also taken it back to 1957, these two lines here. And as you can see, those two lines give you where the Rand should be based on inflation is about 12.20 to about 9.50. We average those out around about 10.70 at the moment. And we've had an average depreciation of 5.7%. So fundamentally, the Rand has to depreciate in order for us to be competitive with our trading partners at 5.7% per annum. But as you can see, that doesn't explain these huge swings that we've seen either side of fair value. And so we just go back to the simple graph here. This is what fundamentals are giving us, that over time, the Rand needs to depreciate at 5.7% per annum. But what is actually causing these huge swings either side? And that's really, perhaps to ask another question is, to all of you out there, what do you think is actually driving the market if it's not fundamentals? Is it inflation news, Zuma's mouth, hedge funds, credit ratings, speculators, interest rates? I've put some down there. There are probably 50 or 60 more. But the fact of the matter, all these are part of the puzzle. But what I want to do is put together, is actually put that puzzle together for you, so that you understand what is actually driving the markets. And what we'll start with here, I don't know why it's doing this, Scott.
I've got
missing
the
a bit of
slide.
information here.
Yeah, I've got the green slide.
Yes, we haven't got the figures on here for some reason. It's not showing up. But what this is showing you here is the percent of forex turnover on which fundamentals are based. Okay, now the daily forex turnover against the rand is at the moment about $17.5 billion per day. Okay, which is a huge amount. But of that, goods and services, which is fundamentals, the sale and export and import of goods and services, is only about 4.6%. So this red bit here is goods and services. So this over the long term, the rand needs to depreciate at 5.7%, but the actual volume of that trade is less than 5%. All the rest of this here is investor and speculative based. So we've got non-residents making up almost 60%, this dark green area, almost 60% of trade against the rand. And whether that's, when I say it's speculative and investment, it can be, property, it can be a bond market, stock markets, the forex market itself, our money markets. All that is speculative based. But you can see now how that has increased dramatically since 1993-94. From it was about sitting at under 10%, it's now 60% is all foreign investor based, and about 95% is foreign and local investors. So you need to ask, what is actually driving the market then with these investors or speculators? And I just would think this little, what I'm going to show you now will actually, change the way you actually see the market, because most people see the market like the rand as a seesaw, where we've got positive information and negative information. And we've got all these factors that are either positive or negative. And some might be bigger factors, some might be smaller factors, some might be more positive, some might be more negative. And there might be economic, financial, political, social. Any one of those, all those factors are affecting the market at any one point in time. And the traditional way to look at this, and which I tried originally, was a fundamental analyst, your economist at the bank, that sort of thing. He looks at this information and he says, we've got this amount, this data that's coming out today. If it's more positive, then it's expected it will drive the rand stronger. If it turns negative, it's going to drive the rand weaker. Now, that's traditionally how we look at the market, but the fact of the matter is you never know what all these factors are, and it's impossible to know. There's just millions of bits of information coming into the market at any point in time. So, what these persons are normally doing is just focusing on some of these larger factors, but they're ignoring all the other factors in the market, and they're deciding on how positive or how negative that information is. It's just impossible to tell where the market's going on this basis. And the fact of the matter is, this is not how the market works. Because how the market actually works is a seesaw, but it's not information. It's persons. It's persons that actually move the market. Not information, but persons' actions and reactions to information that they are focusing on at the time. So as we had here, against the rand, we're sitting at over $17 billion per day. And these persons who are, it's just millions involved trading the rand. They look at these factors that are important to them. And, the positive persons will look at positive factors, negative persons will look at negative factors. And if more persons turn positive, it will push the rand stronger. If more persons turn negative, it will push the rand weaker. And that is actually what is moving the market, is persons. This information filtered through persons. That is what is moving the market, not the information itself. So when we say, this event will cause the market to go down, we're not only saying we know all the factors involved in the market, but we know how people are going to react to that. And that's impossible. So that for a start should be a bit of a aha moment for a few out there. But so where do we go from there? Well, if you look at it at any point in time, if we filter this information at any point in time through these millions of persons involved in the market, we get a price. Today, at some point in time, 1385.56, a precise number to 4 decimal places, which is amazing to me. Is you take all these variables, unknowns, filter them through millions of persons, unknown reactions, and we get an exact price. So this, filtered through this, will give us an exact price at any point in time. And what happens is that changes over time. And so we get these market movements as we see on price charts. And when we look at this price chart here, most persons think that this is a reflection of this data here. But it's not. They're saying already that it's this information filtered through persons gives us this chart, this pricing at any point in time. And studies have shown that our decisions, 90% of them are emotional. And then we rationalize them with logic after that. So what is happening here is that these are patterns of mass human sentiment. So human emotion, these are patterns of human emotion, not of financial information, but of human emotion in the market. And as we know, we tend to do the same things in the same circumstances. So those patterns of mass human sentiment recur. And because they recur, there is some predictability about them. So as you were saying, Scott, that it's similar to weather patterns. If you look at weather patterns, here weather patterns repeat themselves. So here we see 3 hurricanes heading westwards, and those patterns repeat themselves. And what happens is that so weather forecasters have understood that there are laws of nature that govern these weather patterns. And the more analysis has been done in understanding the laws that govern those patterns and understanding previous patterns, the better experts can forecast future patterns. So as you know, we've got the way weather forecasting has improved over the past years is quite phenomenal, but it's through analyzing previous patterns and through that being able to forecast future patterns. But in a similar way, we look at humans, that price patterns are created by emotionally charged actions of human beings. And we are also governed, these are also governed by the laws of human nature. And these patterns recur repeatedly in smaller and larger degrees over time. And similarly, the more analysis has been done in understanding these previous patterns, the better we can forecast future patterns. So just to give you a brief overview on how the markets, financial markets like the Rand actually, how they move based on patterns of sentiment, that, just as we've got action and reaction, ebb and tide, growth and decay, night and day, we've got these cycles in nature. So in financial markets, we've got these cycles that we have a trend and a counter trend, and then another trend and a counter trend. And within those trends, we have smaller trends, which is a 5-wave move up, a 3-wave correction, a 5-wave move up, a 3-wave. And that is, if we drill down into these waves, we'll find another 5, similar patterns, just as we see in nature. We see fractals in nature. And it's a similar thing in financial markets, that there's sentiment on the short term, and there's within a larger sentiment, a larger degree sentiment. So, yeah, understanding that, and
James,
that there are laws.
James, sorry, just quickly, what I find fascinating with that is that we've really, endeavored to build wealth migrate on nature's laws. When you take a bird flies in a flock, it can go 70% further than a bird flying on its own. Just as an example, animals going across the plains, fish swimming in a shoal. And it's fascinating for me that the technology is being pulled back to nature's principles, because quite frankly, that's what drives, all things we know. So it's actually fascinating.
Yeah, well, you understand that we are the top stone of creation, and we are part of nature. We're governed by the laws of nature, and it's not something we consciously do, but that is what happens. It's fascinating to me, Scott. That what I actually study is human behavior in financial markets. I don't study financial markets. That's effectively what I'm looking at, is human behavior in financial markets, and trying to understand where that human behavior is going to be taking it. So now we understand, what actually moves the market now is human sentiment. So we've got fundamentals, but over the medium term and shorter term, it's sentiment that's driving the market. So then we need to ask the question, well, why do we tend to exchange at the wrong time over and over again? And to me, this is one of the most fascinating graphs possibly in this presentation. Is what we've got here is South Africa's net investment position. So this is investors investing in South Africa, and South Africans investing offshore. What is the net position? And as we can see here, with this light blue, that when the Rand was strong, persons were bringing money in. The Rand weakened, persons took money out. The Rand strengthened, investors brought funds in at the point where the Rand was the most money in, when the Rand was at its strongest. And here back in 2006, 2016, 17, as you can see, persons were taking their money out when the Rand was at its weakest. So it's not just you, it's everyone tends to do that. And there's a reason for it. And if you understand the reason for it, you can actually overcome why that happens. And that's what I'll be getting onto now, is why we tend to exchange at the wrong time. And that is because of the hidden enemy. So if we look at how the market moves here. When the rand is strong, and I'm doing this from, I think this was as an exporter or a foreign investor, so I probably should have changed this around, Scott. But when the rand is strong, you know, a foreign investor or an exporter is panicking. For a local investor, he's complacent. He's the opposite side here. But then as the market moves to here, then we're neutral. So you're not positive and you're not negative. When we get to the point here, you know, an exporter or a foreign investor, he's complacent or greedy. And your local investor at this point in time is at the point of extreme panic. And then when the market moves back down again, we then get, you know, back down to these levels and back down to these levels, back down here again. Now, as you can see here, that at these extremes, that what is causing you to make that wrong decision is your emotions. So although emotions are driving the market, at these points here, our emotions are our worst enemy. So at these extremes here, as a South African investor, we're fearful and panicking. We feel the market's going to go further, so we panic. At these points here, we feel, oh no, the market can only go further, and so we're complacent.
So like when it's 888, we think it's going to get to 8 Rand, and then it gets over 10 Rand within 3 weeks.
Correct. So I should have actually put another chart just before this, but I think we'll get onto it. What is happening with that seesaw is that these points here, you know, everyone is Rand bearish. Everyone's Rand negative. At these points here, everyone is Rand positive. And that's why, you know, Warren Buffett says, be fearful when others are greedy, and greedy when others are fearful. Because, you know, at this point here, we all ran positive. There's no one left here to turn positive. And that is why the Rand does not strengthen any further. So everyone you speak to is only expecting the Rand to go stronger. But we've all taken our actions based on that belief, and there's no one left to actually turn from negative to positive until, so the Warren Buffetts of these worlds see that we're at an extreme and it's time for me to turn negative, bearish. And again, at this point, we're pretty much on the even in terms of a seesaw until we get to this extreme where everyone has turned Rand negative. So as you can see, Scott, I think we all can go back to December 2016, January 2017. Could you find a single person that was Rand positive? Everyone was expecting the Rand to go to 30, 40, 50. I think, Scott, one of your, I think when you were doing a roadshow around about that time, but I think you even mentioned the 100. That your person starts saying extreme things and doing extreme things at these extreme points, but there was no one left to turn positive. And so there's, you know, the enemy is your emotions, but the weapon you use is social proof. You know, social proof is a huge thing nowadays, and it works. You know, if you want to buy anything on Amazon or you know, take an Uber ride, you actually look at what their ratings are. You know, what do other people say? And I'll go along with what they say. Now, that might work in other markets, but it's the very worst thing to do in financial markets is to speak to everyone else to see what they think. Because as soon as everyone agrees with you, you're going to be doing exactly the wrong thing. So that can explain to us why we all tend to do the wrong thing at the wrong time. It's because our emotions are telling us that. Our emotions are at an extreme, and everyone else that we speak to is feeling exactly the same way. So, you know, that is why it's virtually, unless you've got a way of not listening to your emotions and not looking at what everyone else is doing, you're going to be doing the wrong thing time and time again. So let's just go on to the next one here. So how do you prevent this happening? Well, what we need to do is actually to control yourself and eliminate your emotions in the decision-making process. And the only way we can do that is by having an objective view of where the market's expected to go and an objective system as to when optimum time to exchange is. And what that does is enable you to make objective, informed and educated decisions and take action at the right time instead of the wrong time. So perhaps, Scott, just to what we have done with so the systems we used is we use technology that's based on what's called the Elliott Wave principle, which is what you see in there, those the laws that govern human behavior in financial markets. But then what we've done is we've taken past patterns and we've analyzed those and then given ourselves the most probable, in terms of pattern matching, existing patterns with past patterns as to where the market's expected to go. And then we together with that, we use momentum studies, timing cycles, and momentum study timing cycles, as well as ratios and proportions of these specific waves to give clients a best probable view as to where the market's expected to go. So as you can see back here, just to show a few examples, this was in 2012 when the Rand was sitting at about 750. We forecasted to be heading up into the 14 to 2050 area. Now at this point in time, no one was talking that way. Everyone was expecting to go stronger. But as we know, that's exactly what it did. Well, let's just go back here.
By the way, Jack, we were buying houses in America in 2012. There's a number of people who are online tonight. When the Rand was sitting at 750, even less than 8 Rand, and since then the Rand has halved and prices have gone up. So yeah.
Then 2014, we had 80% probability of it. Where we're sitting at this point in time was 11.15, and expecting a pullback and then up into that 14 area again. And that's where we were. That's exactly what happened, and headed up and validated in September 15. But perhaps to just bring something a bit closer home is here when it's about 3 weeks after the Rand had topped out last year in January. Rand is sitting at 15.80. Everyone is still expecting it to be heading, up to 20 plus. And we forecasted to come down into the 14.55 to 12.50 area with a likely bounce off here first. And as you can see, here's the forecast. Here's what actually happened. I mean, it doesn't always work like this, Scott, but when it does, it's quite amazing to see how, ahead of time, that humans will actually behave like you predicted they would behave based on the long-term and medium-term sentiment patterns. So again, this is exactly what happened over that period. And then perhaps more to bring it closer to home, last month, we were sitting here at 12.80, and we headed down 12.60, 12.50. Everyone was talking the rand all the way down to 12, 11.50, only expecting it to strengthen, because this is what it had done, for the past however many months. But we were forecasting it to bottom out in the 12.70 to 12.18 area. And as you remember here, we hit about 12.30 or so, and that's when Zuma decided to recall Gordon, and the rand just took off. Now, it's very often at these points of extreme that persons tend to do extreme things. I've seen it so many times. But it never ceases to amaze me that there's often a trigger that causes these market turns. But the sentiment was at this point of extreme that it was ready to turn. So it wasn't the news itself that made the market go up here, but it was persons' reactions based on we had got to an extreme and we were due for the market to move up from there. So that's perhaps just give an example, of how our systems have worked. Scott, I don't know if that, and listeners there, if that gives you an idea of, what moves the markets and why we tend to do what we shouldn't be doing, and how we can use this information to actually make educated decisions. Because at this point in time, your emotions are telling you, hold on, the rand's going further. And everyone you're speaking to is saying exactly the same thing. But it's at this point in time you need to ignore your emotions and go by what the charts are actually telling you.
So, I mean, James, in terms of, I think it makes sense, and there's a number of questions here. But what I'd be interested in is to kind of see what your thoughts are in terms of where we're going and how it kind of ties in, and then I'll see if you answer a number of the questions that people are asking here.
Okay. Well, if we go back to, I think we did, well, and I think we did this last year in February 2016, and I thought I'd just, just put this chart up for history. This is what I showed last year, and based on our analysis, that if you go back to the 1990s, we've had a 5-wave move up here, which is a trend, and then a counter trend to 2011, and then we had this move up to 2016. And we're expecting a move down into this 14 to 10 sort of 40 area. Now, as we know, that's where we've come down into. But just to give you an update on that, if we look at how markets tend to move, is that once you've had a trend, a 5-wave move up, that counter trend tends to come back to the previous 4th wave. So as you can see here, we came back down into this area here. And then we've had a counter trend, and now we've had, from 2011 to 2016, we had another 5-wave move up here. And now we've dropped quite substantially down to 1230 or so, but we haven't come down into this level here. So effectively what you're saying is that the rand hasn't reached an extreme of rand positive sentiment yet. We've had a move that's taken us right up to, over 14, or close to 14. And while there's a possibility that can go further, the overall picture is that and this is based on probabilities, that we need to see a little bit further down first before before the rand takes off back, to previous highs. Now, I don't know. We can't say for sure that that's what it do, but that is what current analysis is showing us. And we can perhaps look at a bit more of the detail of that, Scott. I don't know whether there's time for that.
Yeah, I mean, what I'd like to do is if you can pull up maybe one of your more recent charts, like even just in terms of, so people can see your daily, weekly, monthly, and yearly charts, yes, and actually see what you're predicting and kind of where it's at. When there's lots of questions coming through here, in terms of, if Zuma hadn't have fired Proven, et cetera, and yes, kind of political sentiment when I look through this, but you have kind of answered it in some extent that when you're at an extreme, extreme things happen. Yes. But yeah, also, junk status, et cetera, what impact is there ever things that actually kind of throw the five-wave out, if you want to call it that?
Well, I often, at some of these points, I start, doubting my own analysis, to be honest. But we need to have a look at what the charts are telling us. And I'll get onto the junk status and credit rating thing. I'll show you a couple of pictures or charts on that as well, because I had that question thrown at me last week and decided to do a bit of a study of it. And maybe it's worthwhile just having a look at that right now. Because someone said, what about junk status? So I said, okay, well, let's have a look at it. Economists are saying, well, our rand has to depreciate because we've got junk status. So I said, well, let's go and have a look at the actuals. The Brazilian real against the dollar. There are two recent countries that have been downgraded to junk status. And here you can see that Brazilian real 2011, it weakened all the way up here to 2016. And here we had the three credit ratings downgrade to junk. Now, conventional wisdom would tell you the Brazilian real had to weaken further from here. But it actually went the opposite direction, and it's gone the opposite direction for the last 13, 14 months. So can you explain that, Scott?
No.
No.
I told you, this is above my pay grade. That's why we're interviewing you, by the way, right?
Yeah, it's illogical, but that's how the market works. And if you look at the Russian ruble, here we had it weakening here all the way up to 2015. We had a spike down here, it weakened again, and we downgraded to junk at the beginning of 2015. For the next 4, 5, 6 months, it strengthened. It didn't weaken. Again, it's not logical, but financial markets are not governed by logic. They're governed by human irrationality, but there's predictability about that irrationality. So don't look at what is logic when looking at financial markets, because more often than not you'll come unstuck. And that's what I've learned over the past 20 years plus, and still learning. But that is quite an eye-opener to me. So, an economist saying this just must happen. Yes, logically it should happen, but markets don't work like that. So that's an interesting one.
Yeah, it is very interesting. Yeah. So with all this crystal ball analysis, where are we going? I think everyone's sitting riveted in their seats going, what next?
No, I've run out of time, Scott. Sorry, I must go home. Okay, well, let's just show you here. Yeah, this website that our subscribers we offer subscription to, where we give them a view of where the market's going, and I'll just take you through to our dashboard here. Sorry. Let's see. So we've got, what we do is provide forecasts against the euro, so dollar, euro, and pound. Obviously, dollar is by far the currency that persons look at the most. So this connection has been a bit slow. And what we do is we provide a short-term picture, which is the next few days, and then a medium-term picture, which is the next few weeks. Sorry, the near-term, the next few weeks. Medium-term, the next few months, and long-term, the next few years. So this information is updated twice weekly on a Monday and a Thursday, and as the market progresses, we then update these patterns. And in essence, what this is telling us is that short term, we're close to an extreme here. So over the next week or so, we can expect the rand to top out and retrace back down. The most probable is that we won't go beyond this 1450, 15 sort of level. So a lot of what you call resistance to the rand's move up here. If that is broken above, it would change the near-term picture a bit, and the medium, it would delay the medium-term picture. But once this move up here is this move up that we've seen in the past week or so completing, as long as we don't break above these key levels here, as I looked at that bigger picture, we're still expecting a move down into sort of the 1140 to 1027 area for the balance, going in the balance of this year, before the rand then we start on the next 5-wave move up again. So, it's not, I know it's not looking like that at the moment, and the picture might change based on what happens over the next few weeks, but at present it's looking like we should head down into this area over the next few months before the rand begins its next long-term move up.
A couple of questions here, which are great, that people are asking is, did Brazil or Russia do anything once they hit junk status? Like, did they fire their president or do anything kind of significant which would have caused their currency to strengthen?
Well, Brazil, if you remember right, I think they went through an impeachment process, which took a few months, if I'm not mistaken. I don't know. I can't say anything about Russia. But
and I mean, James, there's a question here from Brian. It says, why won't we denigrate into another Zimbabwe? As in, like, what happened in Zim? Like, how come everything fell off the apple cart like so badly there? Like, just in terms of the charts, like, what's the big difference there?
To be honest, I can't answer that question. I haven't done an analysis on the Zim charts, but all I can say is that there was probably a prediction in terms of where the patterns were going, that it was going to be heading that direction ahead of time. But that's an interesting question. I must actually do an analysis on Zim to find out, where how much ahead of time, if you took a few months back, what was actually happening in the patterns themselves.
So anyone that would like to see that analysis from James, just type in their analysis and let's hold James to that. I'm fascinated in that. James, tell me something. As a real estate investor, I'm always looking at a 5-year window. So I'm not really interested in what's going to happen tomorrow morning or even in the next couple of weeks, and quite frankly, not even in the next couple of months. Because when one's investing in good quality real estate, you should be taking at least a 5-year view. Where do you see us against the dollar 5 years from now? So what are we in 2017? So call it this time 2022 plus minus.
Yeah, I mean, we should be, back at probably our worst levels. Long term, I don't see. If you look at this long-term picture here, we've had a trend up and then a correction down, and our trend up and a correction, we should be heading into way above 18 over the next 5 years, way above 20.
Okay. So the reason I ask it is that obviously, like what happened back in 2013, 2012, 2013, people were like, oh, well, I'll hang on for a little bit longer, and then they don't quite get it right, and then they go way over the other side. And again, my point being is that it's important to look at this stuff, but it's also important to define the difference between being a day trader and being a real estate investor. They're very different.
Yeah, of course. With real estate as well, you've got to look at where the market's going to be in. If you're going to wait a year here, what is the market going to be across there? You might you could save a bit on currency this side, on the currency move, but you could be losing your income, and your capital investment could be a lot more across there.
No, look, I've done actually. I need to update it, so I'm not going to share it tonight. I did that analysis for people. I can't remember what year I did it, 2014 or so, where people were, you were saying it's going to get back to 12 Rand to the dollar. At the time, it was like 14 Rand to the dollar, and I was like, that's fine. And I did all the maths to show people the difference between waiting a year, letting it get to 12 Rand, or actually making the investment in a good quality asset, earning an 8% net return, and what that impact was. Again, if people are interested, they can write in there the I don't know, what would we say? Short-term versus long-term analysis, which, really, for me, again, I don't make decisions based on gut feel or sentiment. I do the maths, and then I kind of see, well, what's the probability, and then it helps me be able to make the right decisions for myself.
Yes.
So just quickly, James, just in terms of timing, there's a couple of things that I wanted to share with people, at the end. Is there anything else from your side that you wanted to share on this? Because I wanted to kind of tie this back and show people how this ties into, what you're doing and how we use this, and effectively how I use this in terms of when I'm investing, so that people can see how this can then be tied back into how they can help them make their own decisions. Yeah?
Well, I think I've shared what I want to share in terms of education about how the market moves, etc. But we have got an offer at the end. We'd like to give persons opportunity to actually take a free trial of our service, but maybe they can wait until you're finished.
Oh, great. No, that's fine. I think the point is also we're going to chuck that in the chat box. So what I'm going to do just quickly is I'm just going to change back to my presentation screen. Just give me 2 seconds. I've got to find my name, because I really want to kind of tie this together. And having seen you do this for the best part of 10 years, for me personally, the first time I saw it, it didn't make a huge amount of sense to me. And like I said to you, when you first actually kind of explained it to me and shared, how the weather patterns work, that's when I really, for the first time, actually, got it properly. And I think really for me, what's important is I'm not going to share this little video, but I will put the maybe if someone who's online can just share this video in the chat box, But for me, it's really also about, you know, how people can do it. I did put this up here as well in my book, because although I need to update this book, it came out in 2014 and had the foreword by Clem Sunter. James actually very kindly wrote most of chapter 2. And so a lot of this analysis and understanding, you know, particularly for those people that really want to get into the detail, is actually here in chapter 2. And, you know, I'll share with you now how you can get a copy of that book.
It's one of the most reliable and profitable investments.
This video is, I'm not going to share it with you. I can, we will send it, and maybe if someone can just put it in the chat box. But I think what is important, sorry guys, just quickly, my son's coming to say good night. Good night. Do you want to say hello to you,
Hello.
So he's just finishing off. Okay. Good night. I'll see you just now. So I think what's really important, you can see this is live TV, like that guy on BBC. So I think what's important here is that, you know, the current system for people investing is really broken. You know, there's, between the investor and the investment, there's often 16 different middlemen, many different fees. People don't trust it. There's little transparency, and there's very of what is actually happening. And really, from our perspective, you know, you tend to find that a lot of people get caught in country. They're not doing what the wealthiest people are doing, which is, like I told you, in terms of the 4 pillars, is diversification and getting access to the right information. The barriers to entry are very high to invest in either locally or internationally. Most people don't get access to good quality opportunities. You know, they might buy, you know, what the middle class tend to invest in, but they're not getting access to what the top 1%. And then once they start looking globally, you know, if you are trying to diversify, if you are trying to find a rand hedge, it becomes extremely, extremely difficult. Because of that, technology's really come into the market, and there's over 200 different fintech crowdfunding platforms around the world. They're disrupting a $13 trillion market. And I think what's really important is that, you know, we sat back many, many years ago and said, how can we make global real estate investing easy? And I think what's important here, if I take you through, I just want to share with you, you know, when you ask a great question, often you get a good answer. And it took us many, many years. I mean, I've been working on this since 1998, and with an incredible team, we've now made it a reality. And you're literally looking at my portfolio here, where we've got investments. I've got investments, myself and my family, on 4 different continents. You know, you can go through, you can look at your funded investments. You can see all the different types of properties, whether they're residential or commercial. If I click on any one of these, I can go to all the information around the property. No more emails, no more management agents, no more broken toilets, no more hassle that comes with the diversification. And then what you can do is you can go into your wallet, so all the kind of hassle around, you know, opening bank accounts and managing bank accounts in multiple countries, you can now fund this with both online and BitPay using Bitcoin. You can manage your different wallets. You can go into your different securities, and, you know, you can see here as an example, you know, my securities are listed. This was a development in Australia, in Brisbane. You can go in here, this tracker number here. You can go on Bloomberg or anywhere else, and you can actually see exactly, you know, that from a trust perspective, you can, because what our platform did is it's integrated with a regulated exchange, which allows people to invest in direct property, but have the safety of a regulated exchange in terms of where you're at. So it's not a syndication, it's not a fund, it's not a REIT. I can go through that in a lot more detail, you know, later if people want questions. And then also, for those of you who understand technology, is that also links into blockchain. So we tend to say that the stock market exchange really provides the old world way from a compliance perspective and a trust perspective, and the new world way of social commerce is all built on blockchain. And I just wanted to give people a very quick kind of overview. And I think why this is important is that we're not there yet, but we really want to be able to integrate it and take all these different systems. You know, the reason I wrote this book is that I got sick and tired of watching people lose money. And I wanted to, and the reason people like James are in chapter 2, and there's many of others, Clem Sunter is chapters 3, 4, and 5, was give an easy way for people to get access to the right information. Remember, what did I say up front? The right information and the right partners. And through that, you know, it provides people with the ability to be able to invest in a couple of minutes. You know, a good friend of mine, Derek, in Dubai, said to me that he's now invested in, you know, from his couch in Dubai, he invested in America and in Australia, all in less than 10 minutes. And it allows people to get access to quality partners, quality opportunities, and be able to invest from as little as $1,000. You know, they no longer have the hassles, the management issues, and the complex global structures, you know, and they can really just focus on the best returns available in the global market. And, you know, why tonight is so important and why James's insights are so important is because they obviously affect where you invest, how you invest, and the type of returns you make. You know, there's really 4 steps. You go online and you register. You can select an investment, you know, yourself. You transact online, and then you manage your portfolio online. And you know what I love most, again, and I to repeat myself, but I don't need to deal with hundreds of management agents, you know, from various different properties. I can just manage everything online, whether it's on my laptop or on my desktop, in terms of where I actually am. You know, the old world was slow, costly, inefficient, and expensive. You know, people were middlemen, and really, you know, there's limited trust, transparency, and accessibility. And most people didn't have access to the information that people like James are sharing. The new world is faster, cheaper, better experience, and better returns. You know, it dramatically reduces the costs and increases the returns. It increases the trust, the transparency. And when you look at the way that artificial intelligence and robo-advising and big data are coming in, you know, tonight we're just giving you a glimpse of where this is going in terms of helping people be able to make the right decisions for themselves. From a platform perspective, we've now got users in 80 different countries. We've got investors from 17 different countries. We've actually helped, you know, clients invest over $54 million through the platform, 827 transactions. Clients have earned over $2.5 million back. You know, we've got a team of about 50 people in investors from 17 different countries. And I think just to, you know, give you a little bit of a background, you know, in November last year, we won the Global Fintech Top 50, which is KPMG. So we were the only country in Africa in the top 50 and one of only 2 in the top 100. We've had over $100 million invested in medical buildings alone in America, just as an example, in the last 3 years. And one of the things I'm proudest of is that we've got a 70% reinvestment rate from our clients. So that's where they invest and then they reinvest in terms of what's happening. I've spoken about the platform being digitally integrated with a regulated listed exchange, which then, you know, allows from a compliance perspective. You know, we've got really long and deep relationships in place with over $3 billion of good quality assets, institutional grade assets, out of the US, UK, Australia, and South Africa. And, you know, really for me, from a team perspective, I can put this PowerPoint up and people can look at it, but we've got key team individuals, leadership team people in key, you know, areas. And then at a board level, we've also got some very high powerful and powerful board members. You know, Justin Clark was the founder of Private Property. He's built marketplaces in 16 different countries. You know, Martin Freeman has built over 5 fintech you know, companies, and Paul Nadir is one of the most respected people in the world. You know, out of well, he's based out of Australia, but in compliance. Dr. Dolph DeRoos wrote Real Estate Riches and part of the whole Rich Dad Poor Dad series. You know, Henny and Peter Fenstra are 2, you know, not very well known people in South Africa, but 2 of the more successful property developers and commercial investors here in South Africa, having, you know, companies here and in Australia, and in Peter's case in Europe as well. And they very much form the backbone of the investment committee, making sure that people, you know, are at least warned of the risks of where to invest and the different types of opportunities. And then we've got 2 very high-profile Americans that are helping us, you know, to stay ahead of the trend and be world-class in terms of where fintech's going. You know, from a simplicity perspective, you know, you've got the investors over here with all the different, you know, tools that we provide them. You've got the property partners globally with institutional quality assets, and we help them list on the platform, and then clients can do the investment. And for us, it's all about, you know, growing at the core. There's really 2 types of properties that people can focus on. The one is stable income, which is existing properties where you paid out on a quarterly basis, and generally there's about a 5-year hold on capital, and that's what we call our income products. And then we've got our growth products, which is where, you know, it's a new development or something of the like. It's generally a 2 to 3 year hold on capital, and you get your investment on the back end. You know, from a risk perspective, we've also got a level 1 risk, and what that means is that there's extensive due diligence done by the investment committee. And then we've got a level 2, which is where it's more open marketplace and people can participate. And, you know, if you are interested in that, I'm going to go into that in a huge amount more detail in another webinar. But it's really important for you to understand the risk when you make your own decisions. I've spoken about the pipelines, you know, coming out of the 3 major markets, and including South Africa. And I think what's important is that if you want to read the book, you know, I talk a lot about GIDS in this book, which is our global investment due diligence system. I'm not going to go into it in detail tonight, but it's our 10-layer system so that we can make informed and correct decisions and ultimately help others make correct and informed decisions for themselves. We don't give advice, but we do provide the tools to help them be able to make the right advice. So if you're interested in what's happening in America, we're going to be doing a webinar in the next couple of weeks. Watch this space on what's happening in America, where the opportunities are, what the impact of Trump is, and also what the risks are. If you're interested in the UK, we're equally going to be doing a webinar on the UK, what the impact of Brexit is. Is London overvalued? Is it still a good place to invest? Where do the opportunities lie? Australia, if you're interested in Australia, that's actually next week. We're going to be looking at the opportunities in Australia, where to invest, and something that a lot of people always want to know in Australia is how do you actually immigrate to Australia? Same with America. How do you actually immigrate, to America in terms of by investing in property? And then South Africa. It's interesting what's happened and what James has just showed us economically in terms of where South Africa is going. But, from our perspective, we also are launching the South African platform to help South Africans invest in South Africa. And really, this all started many years ago when Clem Sunter, with all his scenario planning, agreed to endorse my book with our 4-dimensional model. He was so impressed by the modeling that we did based on his scenario planning. If you're interested in his scenario planning, we do have a live webinar on the 9th of May where Clem Sunter will be updating us not only on the scenarios for South Africa, which quite frankly now you're starting to understand. Now that information ties together with James Paynter's information, because the scenarios of whether we stay in the the hard times, etc., from a South African perspective, will obviously have an impact in terms of sentiment, etc., as well. And we then tie that through into our global property system. Again, tonight I'm not going to bore you with the details. We've got a whole bunch of fundamental, fundamentals which are behind both risk and return, which helps us then know where to invest. And this is why I'm sharing with you some of the partners we work with, like James, because understanding currency is one of the most important things in terms of this. You then get into a 10-layered multi-layer modeling system, which is all happening on the back end between the country, the stats, the suburbs, the property features, the distance to transport and schools and everything else. This is the REAP system from Dr. Dolph de Roos. And then, the due diligence checklist, which is 142 levels. And, anyone that wants to participate and understand all this stuff, really can get into deep analysis with our inner circle. If you are interested in inner circle, just type it there, inner circle, which means you can learn while doing and really kind of get into the back end of how, effectively US dollar billionaires invest and do their due diligence. But I really just wanted to kind of give you a bit of an overview. I did do this in detail last week. You can look at the 4 different markets of when we entered them and when we left them, and it's very much what James is talking about. We don't use kind of sentiment or gut feel. We use the numbers to tell us where to invest and when to invest, and help people, in terms of investments. And when you look at South Africa, it's not just the rand. If you invested as far back as 1978 between America and South Africa, you'd be 424% better off if you had invested in America. You'd be 499% better off if you invested in Australia. You'd be 332% better off if you invested in the UK. And the question I always ask people is, if you knew this and you could have a blended portfolio, a globally blended portfolio, including South Africa, but a diversified global portfolio, how many of you would have made different decisions in 1978? How many in 1988, in 1998, or possibly even 2008 in terms of where we're at? I just wanted to share with you a little bit around track record. These are just some of the medical buildings. We projected a return of 8.3%. We've currently, over the last 3 years, been paying out 8.82. On this one, we projected a return of 11%. We've been paying out 11.28. I want to be very clear. This is in US dollars, no rand devaluation, no capital growth. It's purely cash-on-cash returns. This one here was 8.3%. We've been paying out 8.48%. This one here was 8%. We've been paying out 8.18%. Now, just as a matter of interest, I'm not sure if most people know, but the average American REIT is paying you between 4.5% and 4.75%. So just in terms of comparing like for like, and that's what I mean by cutting out a lot of the costs, cutting out a lot of the middlemen, because I'll that return in your pocket. This is a project that we've currently got in Texas that's closing out as we speak, where it's a 19.6% internal rate of return and a cash-on-cash return of 7.9%. So, you know, that's where, James, for me, these things get interesting, because one looks at the fact that the rand might be, strengthening, but as you said, the asset class is actually going in the opposite direction in America, and equally one would lose out on the cash-on-cash returns over a certain period of time. And, you know, a building that actually closed literally, well, I don't know, today's Tuesday. Yeah, it actually closed yesterday or today. I get a little bit lost with time zones. Was another medical building, and there's a couple of investors that are finishing their transaction there. If you're interested in either of the two, just type in there multifamily or medical 7, and people can give you some information. I'm really quite excited. There's a huge amount of pipeline coming as well. You know, both out of Australia, United States. You know, these ones, Hollywood Circle, you can actually get an EB5, which is a $500,000 investment, and you can actually, get a green card. You can effectively immigrate to America. And then the one dead in the center is 0 to 1, which we are aiming to launch on the 18th, which is next Tuesday, so a week today. It's the tallest building in Cape Town. It's one of the most iconic buildings in Africa. You know, previously to invest in the co-development space with the developer, you would have needed about 2.5 million rand in cash and about 7.5 million rand in bank guaranteed debt, which means you would have needed plus minus 10 million rand in liquid cash. And now you can get involved from 1,000 rand, which I think is pretty exciting. So, you know, when you look at the sustainability, to build and do something like this, you need the people. We've got them in place. You need the platform. It's built and operating. You need good quality supply, so that people get access to world-class institutional grade assets. You need, investors who want to be able to participate, and then you need to be able to sustainably grow. And I think the most important thing for me is a personal story. You know, back in 2009, I was in Brisbane it was actually Sydney. It was Bondi Beach. I was with Henny Besaidnout and Peter Fenstra, and they were buying medical centers. And, it was an absolute no-brainer medical. The doctors are economically resilient. They tend to sign very long-term leases. If you think of medical, they only tend to stay in one place. And they also sign very favorable long-term leases. So that, it becomes the perfect investment. And I remember saying to Henny, wow, that's absolutely amazing, but how do I invest? And he said, well, the minimum investment's 5 million Australian dollars. And unfortunately, I couldn't participate. But, since the platform went live in 2013, the minimum investment then was 100,000. Then we got it to 10,000. It's currently sitting at $1,000 if you invest offshore. And, we're about to launch 1,000 rand if you invest locally. And so it's really, really exciting for us how we're enabling people to be able to participate. And so, for me, in conclusion, most people don't know this, but the wealthiest of the wealthy use a thing called family offices. And what family offices do is that they help the families understand their bespoke individual needs, and then they help them globally look for good opportunities, and then they marry the two together. And really, we call that smart investing. When you look at my son, this is a picture of him, a couple of months ago. He's playing Global Monopoly, and he's learned at a young age that to own green hotels and red houses and earn a passive income is what we call smart investing. And, his dad, with an incredible team, has now turned Monopoly from a game into a global reality, because this is really his dad's global portfolio that is diversified across 4 continents and a mixture of residential and commercial. And that's what we call smart investing. And I think really from a conclusion perspective is that the wealthiest families, the top 1%, continue to create generational wealth. And that's what we call smart investing. And I think our purpose and our vision is to put smart investing in every single person's pocket. And so before I close out and kind of share with you, and James and I answer any questions, I just wanted to share with you some next steps. If you actually go online and register, we will not only give you access to the link that James is going to share, we will also give you access to 3 white papers. So I spoke about them earlier: how to get started in real estate and build wealth, how to ultimately invest offshore if you're at the intermediate level, and if you're at the sophisticated level, how to create a global real estate portfolio. We'll give you access to my book, Property Going Global. We'll give you access to videos by Dr. Dolph de Roos, who wrote Real Estate Riches. And for anyone that logs in as a user and signs up on the user before 5 p.m. tomorrow, we will also give you a voucher for $100 so that you can actually participate and get started in ultimately diversifying in terms of where you are. You know, what's amazing now is you get the ability to invest $1,000 offshore to get started, to dip your toe, or 1,000 Rand if you want to get started in South Africa. And for those sophisticated investors who want to invest 10,000 or more, you know, they can speak to, you know, one of our investment consultants or asset managers who can actually help them through the process. But most importantly, we want to enable all South Africans to be able to start, you know, their journey in terms of investing globally. And I think for me, the most important thing with that is that we started tonight, you know, well, we actually started last week in terms of explaining to people some of the entry-level nuts and bolts. So if you want to go and watch that, you can get all the details. You know, James tonight has taken you through the Rand and a lot of the information and the type of partners we use to help us make the right decision. You know, next week, we've got our partners on the ground sharing about Australia. You know, we've also got David William Jones talking about the 0 to 1 launch. And we're going to be sharing with you how you can win a 2.6 million Rand apartment in that building. So you'll be sure we're not wanting to miss that one. We've got Willem van der Post, that's one of the partners of Deloitte's. He's recently resigned to go on his own, but he's been running, you know, their whole Center for the Edge and exponential technology disruption. And he's going to be sharing with you what is happening with technology around the world. Our partners on the ground in America, including Dr. Dolph de Roos, will be sharing what's happening in America. Our partners on the ground in the UK will be sharing. I've already explained to you on the 9th of May, Clem Sunter will be live with us looking at the future of South Africa and the global scenarios. I spoke to him today. I'm absolutely fascinated what his thoughts are in terms of what's been happening. And then Roger Hamilton is also going to, you know, he's one of the world's thought leaders on the top global trends in technology and real estate, and also how one can get access to investing in a Big 5 game reserve, you know, which again was only previously. So that's on the 9th and 10th. It's going to be a busy week with huge information. On the event side, we've got some live workshops happening in KZN. It's on the 16th of May. There's effectively going to be 3 major sessions. So from 9 till 12, we're going to have a sophisticated investor workshop, you know, where we really help people understand how to create a global and balanced portfolio for themselves. We're going to have a wealth partners lunch where you get to meet other investors. Then in the afternoon, we're going to look at technology and the next $13 trillion disruption opportunity in real estate and how you can actually become a shareholder in a company that is literally disrupting and changing this industry, and it's what we call a wealth partner. In the evening, we're going to do a startup investor workshop. So that's where I'll be, you know, sharing all these insights in terms of, you know, what I've learned from Tony Robbins, and we're going to have some amazing speakers in terms of, you know, that's more the beginner, you know, startup one. And then in Cape Town, it'll be the same again on the 18th of May, and in Johannesburg, Midrand on the 25th of May. For those wealth partners, as you know, one of our most exciting things for the year is where we all go away together. We've got an incredible community of shareholders in our organization, which we call Wealth Partners. We'll be going away from the 23rd to the 26th of June with all our partners, some of our partners from overseas in America. It's one of the best times for me to get to, you know, mingle with other like-minded people, to discuss strategies both locally and internationally, and to learn from some of the best investors globally. And then lastly, you know, we're still finalizing the dates, but the proposed dates are where technology meets real estate, and it's a full 2-day workshop between Willem van der Post and Dr. Dolph de Roos. So that just gives you a little bit of an understanding. I think from my perspective, you know, you should really be able to see the contacts page now with Wealth Migrate. And I think, Jay, you know, from your perspective, James, if you could maybe just type into the chat box for everyone how they could get access to your special offer, I'd really appreciate it. I know we've gone over this evening in terms of time, but there's so much that you wanted to share, and I just wanted people to really kind of know how they could integrate what you've taught them with regards to the different services that we offer from a technology and platform perspective to help them make the right decisions, you know, for them and their investments. And one last thing, you know, while James is putting that out there, and I'm going to answer some questions, is that, and I'm going to put some polls up as well, just by the way, because I'm fascinated on what your thoughts are based on everything you've seen tonight. But one of the things that's really interesting is I had a client who's invested a number of times called Brom, and, you know, he asked me the question. He said, you know, someone like James will share us all this information, and, you know, should I wait now for the Rand, or, you know, what's happening economically with Donald Trump, or should I wait for Brexit? And, you know, one of the things I'm learning, you know, again, and I could probably get this book quickly, which is the Tony Robbins book. I think it's here. If it's not here, I apologize. I don't actually have it at hand. Probably should have had it close at hand. But just give me 2 seconds. Yep, I've got it here. So this is the book that I wanted to share with everyone. And I can see that 46% of people have voted here, so I'll wait till you get over 50. I'm not sure if you can see my webcam while the polls are up, but this book is the one that I was trying to show you here, which is the Tony Robbins Unshakable. And you know, it's absolutely fascinating here. More than 96% of funds don't actually beat the market over a 15-year period. And if they charge you if you can save just 1% in fees, you will literally increase your retirement income by over 15 years. So don't trust me, read the book. And what he's talking about in here is the 4 pillars of wealth. And one of the most important ones is diversification. But what I love is that in the old days, to diversify was very, very difficult. You needed a lot of money. Whereas now you can actually diversify quite easily. You can take $1,000 and invest it in one building. You can take $1,000 and invest in another building. You can invest in different countries. You can invest in real estate and commercial. And you can really create yourself a diversified, balanced portfolio. And that takes into account everything James is teaching you, so that you can look at the long term. You can really make the right type of decisions for your short term as well as your medium term. James, have you managed to put that in the chat box for everyone?
I'm just having a look here. It says to organize in panelists only, so I don't know, how do I change that? Oh, here we go. How do I...
Just while James yeah. So I tell you what, someone's given me a good idea. Yeah, Cliff's given me a good idea. What I'll do, James, is I'm going to change you to your screen, and then you can just show it on your screen.
Yeah. Okay.
So I'm just interested in what people are, what people like and what they're interested in, and then James, it should have gone to you if you just press.
No, you need to close the poll apparently.
Okay. There we are.
Okay. I'm just trying to see where my. Can you see my screen?
Not yet.
I'm just trying to see why. Yeah, I can't either. I mean, I can. Oh, yeah, there you go.
There we are. So give me 2 seconds. I'm going to type that in the. Oh yeah, put it in there. It is in the chat box for everyone. So it's, if you just go to the chat box, guys, it's forexforecast.co.za/go/free trial, and you can literally just click on that, and in terms of being able to get that information.
Yeah, so I mean what that will include is a full Platinum Plus subscription level, which is those 4 time frames, and then a whole lot of other tools and features that will take you through once you sign up for the free trial. So it's a whole lot of tools that will help you. Yeah. So
James, can I ask you? There's a whole bunch of questions here, and so just while we're doing some of the questions, I want to just I'm going to keep putting up a couple of polls, because for me it's always very interesting for people to kind of share what their thoughts and needs are. It helps us become better at helping people. But I want to run through, there's a whole lot of questions here, and I want to just go to the top and see if we've been through all the questions, and if people have got more questions, chuck them in. I'm conscious of the time, but our whole philosophy is to try and add as much value as possible. So let's just look here if I can see. There's some questions there's lots of questions, but I just want to see which ones. So I mean, Tony said, if sentiment drives market, then now the wrong time to take money out. I mean, I think you pretty much showed that in terms of the graphs. And again, it's different for every person. It's not about giving advice, but it's also about people being able to, see the different sentiments. You also provide people with the different probabilities, and then they can make, the right decisions for themselves,
Yeah, correct. I mean, in terms of sentiment is very negative at the moment. So short term we see that peaking out, but we need to see where the next few weeks take us.
Someone's asked about gold. You made comments earlier saying that the Elliott wave analysis can be used on many different asset classes. Any thoughts on gold?
Well, of interest, I mean, we've done gold forecasts over the for clients over the years, and if anyone's interested, we perhaps can put together a special for listeners on here to do that. Gold is looking to, from a past analysis, the most recent one, that we've had quite a pullback on that, but then it looks like we're into the next push up. So in the next few months, I see gold actually strengthening quite a bit.
Okay, that's fascinating. Mark said here, to be fair, the Brazilian real strengthened due to the president being impeached. Is your analysis reflecting Zuma being impeached or not?
Well, that is interesting because the analysis doesn't. I mean, Elliott wave doesn't tell you what's going to trigger those, what events are going to be triggered. But more often than not, I think last year when we had this webinar, Scott, I said, I don't know what is going to drive the rand down to 1250, because at that point in time everything was so negative, but yet that's where the rand went, and that's that's what's fascinating about this game, is you don't know what's going to drive it there, but that's what it looks like in terms of where overall sentiment is going to take the market.
Yeah, no, I hear you. Then Andrew Pino asked a question. Problem is that there's huge risk going into offshore assets. USD, GP, Euro are not in good shape and a bang should be coming. So I'm not sure, Andrew, if you're talking purely about the currency or whether you're talking about stock markets or real estate as an example. I mean, I think if one takes a broad brush approach, there's risks in everything. And that's why you've got to have the right information and the right partners, to be able to limit that risk in terms of what it is that you're looking for. I'm not sure, from your perspective, James, you've obviously got all the research there to help people make, the right decisions for themselves in terms of both the euro, the pound, the dollar. You don't do the Aussie dollar, eh?
I don't, but again, if there's interest there, we can do a one-off analysis and do a special for attendees. So if there's sufficient interest, we'll gladly do we have done, but it's not one of the currencies we do as on one of our regular updates.
Okay. Then someone said, for those of us outside the UK, these forecasts looking to the 18s is good news for us to buy, in not so good for locals to invest, similar to a retail sell for shares and maximizing investment as a foreign trader. So yeah, I think obviously it's different for different people, and again, why it's really important that people know and are taking into account with regards to their own investment strategies. Thank you, Nili, for the kind words. Okay. We've got a whole bunch of people that are interested in the inner circle. I look forward to your next webinars and starting to plan the medium-term investment. Next info on tax. So need info on tax implications if you live in South Africa and owning assets in the US, UK. So Ben, it's a good question. And as a South African tax resident, you are taxed on your worldwide income. We have spent a lot of money with Grant Thornton, and more recently, our whole platform is actually audited by PKF. to help people, run it efficiently from a tax perspective. So I'm not going to sit here tonight and try and go from a tax advice perspective, but we do a lot in terms of that. And I know you said, especially the US, we spend a huge amount of money and time with tax authorities in both the US and in South Africa to make sure that our clients are tax efficient. Let's see here, a number of people are interested in Medical 7. A lot of people are saying, thank you very much, James. Anyone that wants the white paper or my book, all you got to do is sign up to the platform and you can get it, and you'll also get the $100. And if you don't have James's link, we can email it to you afterwards as well. I've signed up and would like to read papers and would like to make use of your, will someone email me tomorrow? So yes, Craig, we'll send you all the stuff. If Zuma doesn't get recalled before his term ends, will the rand continue to weaken? Dimitri, that's for you, James.
Yeah, again, Scott, I don't, in terms of looking where the market goes, I don't look at politics, news, financial events, anything like that. I just look at what the market patterns themselves are telling me. So, if that is where if the market is going to head stronger, based on the current analysis, if Zuma doesn't get impeached, it will be something else that drives sentiment more positive again. I can't say what. Nothing looks too positive at the moment, but that's often when things, have gone far enough. So again, I can't say what events will happen. All I can say is that's where current sentiment patterns are showing where the market's likely to go.
Maybe we'll win the Rugby World Cup or something. Guys asked a whole bunch of questions here about being a South African permanent resident and etc. I suggest that we answer that offline. Levon says he wishes he was back home so that he could attend these awesome events. How do we register for the workshops? We'll send out that information. Yep, so we shared James's screen. A lot of people saying thank you very much, James. Do we register one portfolio for both a husband and a wife on Wealth Migrate? Brendan, great question. We are actually at the moment, we do have just one. So for me, like Kelly and I just have it on my portfolio. It is something we're wanting to do with a bit of time, which is actually where you can have like two users tied to one platform. We're not quite there yet, but it is something that we definitely want to be able to do that. So for now, I would just do one person for a family. What about no confidence vote on the 18th? So Phillips asked the no confidence vote on the 18th. It's a great question. I suppose one always lives in hope, but I don't personally see a lot happening. And I think what you're trying to say, James, is that these things go in sentiment, but maybe that could be this positive sentiment you're looking for, that the rand goes back in the right direction, the strengthening direction.
Yeah, maybe. I found you get caught up in a lot of what ifs, but at the end of the day, you need to stop looking at all the what ifs and look at what your system is telling you.
Yeah, no, granted.
Yeah,
Tony,
your emotions will take over.
Yeah, no, I completely understand. Tony's asked a question here, and I'm not 100% sure if I understand, but maybe you will. Would potential future dollar weakness have a significant impact on the rand, positively or negatively, due to the dollar index dropping below 100?
Well, that's also interesting, because my last analysis on the dollar is that the dollar is expected to complete what's close to completing a cycle, a strengthening cycle. So that could be a force that could strengthen the rand if the dollar does start weakening.
Okay, then Nick's asked a bit of a topic, but I have a residential property in London and need to remortgage it. Any suggestions? Nick, quite funny enough, I was on the telephone this afternoon remortgaging one of my UK properties. So yeah, I do have suggestions because I bought it in 2002 and there's a lot of value in it, and it's really kind of dormant money sitting there that could be far better invested. So I'm actually working on it myself, and once I've done that, I plan on helping a number of our clients, because many of our clients have got properties in England that they're wanting to remortgage. Rob Smith said, what percentage of sentiment that you talk about is overseas investors? So I think you said 96, if I remember rightly.
Well, overseas is about 65. It's about 2/3, 65,
okay, sorry.
66%.
So it's 96% or 90% something market, but 65% is overseas sentiment.
65% overseas, yeah.
Okay, great question, Rob. Ian Hawthorne says, based on what James' prediction of the Rand over the next 5 years, do you think it's wise to invest in South Africa? I understand we should have a diversified portfolio. With our experience of Zim, do you think it's wise based on the Rand depreciation of 6% year on year? You know, guys, this is where it really kind of gets down to different people and different opinions. I've always believed in diversification across asset classes, across currencies, across, even in terms of across countries. And I think what James is showing you is kind of perspectives on where things are going. You could also argue that in South Africa it's a higher inflationary environment, and therefore, you tend to, and high inflation actually is very good for real estate in the long term. So I think, Ian, there's a lot of things to consider there, and maybe you and I can have a chat offline. I don't know, James, if there's anything you want to say, but obviously, from your perspective, sorry, my son's come to have another chat. But you can see it's school holidays at the moment. Come sit here while we finish off. But I think, I don't know if there's anything, James, you want to mention from what Ian's asking. Thanks, boy. Good night. But my understanding is you're kind of saying we're going to be going into higher territory over the next 5 years. I think you said around 18 rand to the dollar.
Yes. Yeah, I mean, I don't want to comment on on local investments. Obviously, what would be concerning to me is all the expropriation bill side of things and owning property, but that's capital that's at risk, not the return.
Yeah, and I mean, it's interesting. I put up a little poll there about investing in 0 to 1, which is that tallest building in Cape Town. Here's a better question for everyone: if it was given to you for free, would you like to be part of the competition? And it's going to be so easy. We're going to share with you on the webinar with David William Jones how to actually, be able to get in that competition, and everyone's going to be able to get access to it. Okay, George has asked, what analogy do you do on Bitcoin? So this is an interesting one, James. I'm not sure if you have you done your Elliott wave on Bitcoin?
I downloaded some data the other day, but I haven't done an analysis, no. But it's a financial market, so you get those same patterns in Bitcoin.
Well, now that we've sorry, I was going to say, now that we've got BitPay as a solution, for people to fund their wallet, maybe it's time to start looking at it.
Well, that's another one. I mean, if there's enough interest, we could actually offer it to attendees. We actually as a one-off.
Well, I mean, I'm hoping that the future, and I always joke with people, but when you take this book between the stuff you were doing and the stuff Clem Sunter's doing and everything else, I always joke that the only people that ever read this book was my mother. And if we could take all this analysis and plug it all into here and help people become smart investors, that's really my dream of where I see this future going. The technology is not quite there yet, but we're getting there. In terms of being able to pull all this big data, take artificial intelligence, add that together with robo-advising, and that will people will be able to make the right decisions for them and themselves. Then Cliff has said, we do allow for both the husband and wife to have their own profile. So thank you. I've got far more intelligent people part of the team that have answered that for me. So thank you, Cliff. Costa said, when Brazil got downgraded, did the bond yields not go up, attracting more money for higher returns, even with slightly higher risk? I'm not sure. What's your thoughts on that, James?
Yeah, I think maybe if you look at what's happened with Brazil and Russia, I mean, it could be that person saw opportunities there with higher return, although there was higher risk. So yeah, it depends what what the sentiment is at that point in time. It could well be that person see it at higher risk, but at a higher return.
Yeah, well, look, there's overwhelmingly a lot of people asking about that Zim analysis. Eh? So you've definitely sparked people's interest on that, because I think everyone, certainly me included, really I've watched your Elliott Wave principle over the last 10 years, so much so that I've given up trying to judge it or question it, but rather just listen to it. But in the back of your mind, I always think to myself, yeah, there must have been some guy doing Elliott Wave in Zimbabwe, and it didn't quite go according to his plan.
Yeah.
Gunther's asked, thanks for a good webinar. Which investments are available for $1,000? So Gunther, you can go online, register, and see what's available. It does depend on projects and what's being opened and what's being closed, but there definitely are opportunities for you to be able to participate from $1,000. And I am conscious of the time being 9 o'clock, which is longer than we normally go on. I'm not sure if there's any other questions, but anything else from your side, James, that you would like to kind of close out with?
Not really, Scott. We just hope I've given enough value for the 2 hours, and just urge persons again, take on that free trial. Together with it, we've got some ebooks that will be, how to use it for maximum advantage, and you'll get all those free. And as part of that free trial, you'll get direct access to me for a period. So, I just recommend persons, if they're interested, to actually make use of that free trial offer, and we can take it from there.
No, well, awesome. I mean, look, from my perspective, like I said right in the beginning, I've been working with you for many, many years. I can't really give much more of an endorsement other than the fact that, you've said these things. I just used the one in March of 2010 because I found it so dramatic at the time that so few people took action, and then there were actual physical results. I think a lot of people have given feedback on stuff that they want tonight, and some of the analyses that I've done in the past to help people, with the right systems to know when to invest, for themselves. But I just want to say from my side, I'm really deeply grateful for you sharing and going into it. One of the guys tonight, Levon, said, "Thank you, James. I never thought to even attempt to understand trends. I now have a much better understanding." So many people saying, "Thanks so much." Please, we will send a follow-up email with the link for the free trial. Is it possible to get a replay of this webinar? Yes, it's recorded. Do we need to provide certified documents by the end of tomorrow to access the $100 and other bonuses? We're having an issue uploading the documents. Brendan will get someone to help you with regards to that. But yeah, certainly from my side, I want to finish off and really just kind of share with you a little story that's very personal to me. And it's a story of two brothers. And really, many of you have heard this story before. I talk a lot about it in my book. But for me, the one brother was my father. In 1976, he decided it was time to leave Zimbabwe. He moved down to South Africa. Him and my mom literally arrived with virtually whatever they could take in the car and nothing else. And he lived a life of reaction. He put my brother and I through a very good school, and which took a lot of hard work. But unfortunately, very much invested with, the old school kind of financial industry. And by the time he died, he had less than 50 Rand in the bank. In fact, Standard Bank actually denied him the 50 Rand, withdrawal. And his brother was far more, my father was very reactive. His brother was far more proactive. At the age of 30, and started back in 1980, he opened his first offshore bank account, invested in first world assets. He earned a first world income. He used and got access to the best information and the best partners. And that enabled him at the age of 53 to buy his way into Australia back in 2003, buy a house for cash, put his kid through a private school. And that's what I spoke about earlier about being a global citizen. It's about getting access, to that freedom. And so I want to thank everyone that's been online tonight. It's really an honor and a privilege to share with you guys. And, you know, an old friend and old partner, James, who, you know, as I said, I've followed him for many, many years. He wrote an entire chapter in the book and continues to amaze me with how accurate the trend analysis is. And like you say, James, you know, the human analysis is and trying to understand human sentiment is really where people are getting this wrong. I think your exact wordings were financial markets are not governed by human logic, but governed by market sentiment and behavior, which is predictable. And I suppose on that note, you know, it's late into the evening, and let's call it quits. You know, I really look forward to seeing people on future webinars. Please take up James's offer. You'll be astounded by the level of information and detail that you're going to get. And go and sign up on the Wealth Migrate platform. You know, we want to be able to give you a reason. If you do it by 5 o'clock tomorrow, we'll also not only give you all the education, but we'll also give you $100 to start becoming a global citizen and to start investing. So I think that's all from my side, James. Thank you for your time. Thank you to everyone that's been online tonight. And if there's any other questions, we'll follow up afterwards. Good night.
Yeah, thank you. Good night.
Worst has asked a great question here about a property. I'm gonna log off and say good night.
My pleasure. Good night.
Good night.